Hello and welcome to a brand new episode of ETMarkets AIF Talk, a show where we discuss opportunities as well as challenges faced by the fund managers in the popular space of ultra HNI investing. Well, my name is Shatajanand, and today we have with us a very special guest, Vaibhav Sanghavi, who is CEO ASK Hedge Solutions, with us to decode markets, AIF trends, and investment patterns. Welcome to the show, Vaibhav.
Thank you very much. It's a pleasure to come on the platform.
Thank you so much for taking the time out, Vaibhav. And we've seen a good recovery on D Street post, geopolitical tensions as well as the tariff warfare. How are you seeing these developments at this point in time?
You see, I think the turbulence from a market standpoint actually started since last September end,
Right.
when we saw, kind of realignment within the emerging markets. And probably from November onwards is when we saw kind of Trump winning the elections, and our expectation in terms of our earnings and valuations were not very comfortable as well.
Right.
So for a period of close to about say 6 months, we were riled under these kind of events. Lastly, from a geopolitical and a macro headwind perspective, I think we also faced the tariff uncertainty along with the current geopolitical situation. Now that those two big headwinds are more or less sorted in that sense. And one more thing is basically that the earnings also have been in this quarter, marginally better than expectations as well. So we do think that as things get stabilized, volatility kind of decreasing and earnings stabilizing is where we may see the environment kind of beneficial or probably conducive for a gradual market rally to happen.
Absolutely. And we are seeing some bit of signs of that happening as well on the ground. But let me also, get your viewpoint on the recent fund that you launched. In fact, what factors have contributed to the ASK Absolute Return Fund, in fact, outperforming the other liquid fixed income alternatives within the, you could say, 1 year period or 12-month period?
So, first of all, let's understand what absolute return stands for in this case. ASK absolute return is clearly aimed at generating an alpha of close to about say 150 basis points post-tax, post-fees as against any 12-month liquid fixed income instruments. Now, that demonstration is clearly evident from the track record since we launched since last February, in the sense that it has been extremely consistent. And one of the biggest reasons why we've been able to do that is our, extremely tight controls in terms of the risk management, where our net exposures on a long-term average generally is close to about say 15%, with a further lesser beta. And the aim here is to, be preserving the capital at every given point in time while generating those kind of alpha on a consistent basis. So you systematically kind of mitigate two biggest components of risk in the market, which is your market risk and a stock risk, by a very systematic process. And that is how you kind of generate alpha on this strategy. And this is what we've been able to do in the last 12 to 15 months.
Absolutely. And in fact, the interest is also growing, from the HNI as well as the ultra HNI community. And so my next question is likely tilted towards that. So how is, ASK Hedge Solutions planning to leverage the growing interest in the alternative investment strategies among the affluent India or the HNIs or the ultra HNIs, the corridor?
So just to give you a perspective, right, from a global standpoint, the exposure towards alternates from an overall portfolio standpoint is close to about, say, 15%. Now, in India, if you see, the exposure towards alternates have been very minuscule or probably very, very marginal as a overall total portfolio allocation. So one, there is a tremendous amount of scope in the market to be kind of captured over a longer period of time.
Right.
And two, it is extremely important that we offer products, across the risk spectrum. Now, when we talk about long short as a category, long short as a tool can be used to generate or manufacture products, which can be extremely conservative, like our ASK Absolute Return Fund, to very aggressive, like our ASK Index Plus Fund as well.
Mhm.
So we have two different strategies across the risk spectrum to bridge or probably add value to those respective categories of your investments. And that is how we
Mm.
plan to capture the overall rising interest from HNI
Mm.
to HNI perspective.
Absolutely. Good that you mentioned about the category three, the category three funds, and I wanted to get your perspective as to how are category three alternate investment funds are navigating the volatility on B Street, because especially in the month of May we have seen good 1,000%, 1,000 points rise in Sensex, and then probably another next day we are seeing close to 800 to 1,000 points drop. So yes, the volatility has been slightly on the higher side, but bulls have managed to sort of remain in control and push the sort of markets higher, in a slow and steady pace.
So rightly so, because the category three has an ability to go long or short the markets as well. So
Okay.
whenever during the turbulent times, or if you
Mm.
see again coming back to those period from September onwards,
Right.
October, November, December, Jan, Feb,
Mm.
5 months of negative returns on Nifty actually helped us to generate 5 months of positive returns on our absolute
Oh,
return fund, purely because we have an ability
very nice.
to
Mm.
actually short the market as well, or probably go very
Mm.
highly hedged on the portfolios as well.
Yeah.
So while the idiosyncratic risk is something which we try to capture and probably see how we can, utilize the discrepancies within the sectors as well,
Mm.
to have our fundamental views on the stocks and have it on the long and the short side, and make those kind of money as well, while keeping our
Mm.
exposure extremely tight. So category three has an ability to do it. The team has the right skill set,
Mm.
and that is what we kind of utilize and capture the opportunity which is there, and how we protect
Mm.
our portfolios.
Absolutely. And do you also use derivatives to manage the downside risk or amplify conviction calls, Vaibhav?
Of course, derivatives is an important part
Uh-huh.
to help us protect the portfolios, because if you want to hedge your portfolios or take short positions, then derivatives is the only tool which you would probably able to use to get
Right.
into the portfolio. So yes, derivatives are used, and they're used
Mm.
extensively to try and see how we can are able to generate those risk adjusted returns.
Absolutely. And in fact, earlier in the conversation, you did mention about the earnings growth, which is slightly, positive, but then again, very great. But nonetheless, despite a sharp drop in the FY23, you could say on an overall basis, what factors are contributing to the improved market sentiment in FY26?
If we look from on a FY26 basis, right?
Hmm.
Uh, let's look at holistically in terms of first of our GDP growth, right?
Right.
In our view and estimates, markets or the street would be surprised on the positivity from a GDP growth perspective. And why do we say so? Is
Uh-huh.
because if you look at the track record of the current dispensation of the current government, they have
Hmm.
been hugely focused for the last 9 years or 10 years on the
Sure.
investment side of the GDP constituent.
Right.
Now, everybody knows that yes, GDP is a combination of investments plus
Mm.
consumption plus your net exports. So
Mm.
investments was always in place. It is in the last 6 months, that 6 to 9 months, that the current dispensation, along with your state governments, have
Mm.
focused on boosting consumption by
Okay.
welfare schemes on the
Mm.
state side, and
Right.
by providing those kind of tax rebates on the central side.
Mm.
So when we look at an environment where investments were already in place, plus a
Mm.
consumption boost which is likely to come in the next year, my estimate is that the GDP growth would be better than expected, as against the street expectations.
Sure.
Lastly, because of this, we will find, or we will see, that the earnings recovery is starting to happen in the second
Mm.
half of this financial year, and so on and so forth. And
Right.
lastly, the caveat is still there that provided that no global uncertainty or no black swan event kind of happens in a normal situation,
Mm.
the
Mm.
I would place my bets much on the positive side from a market stand.
Absolutely, you're right. So second half might see earnings recovery. That's a view coming for Vaibhav. Let me also get your perspective on the FI flows. In fact, the recent FI inflows and domestic investor participation indicate about confidence in the Indian equities, and in fact, in the month of May, FIs have turned sort of net buyers as well. What do you make of this picture?
So I think, from a FPI investment standpoint, one, from a
Hmm.
very broader perspective, they are hugely correlated with the global interest rate movements.
Right.
Whenever the interest rates have gone up, we've
Mm.
seen good amount of outflows actually happening from the overall emerging market baskets.
Okay.
Now, within emerging markets, India is close to about, say, 20% weight. So whenever
Mm-hmm.
we see any redemptions or outflows from an emerging market as a basket perspective, you will by default see money flowing out of India as well. So in the last 2 to 3 years, since 2022, when the interest rates started to move up, we
Mm.
saw consistent outflows happening. It is now that the environment has kind of changed
Mm.
to potentially interest rates coming down from a global
Okay.
perspective. So my take would be that, apart from the shorter term realignment within the emerging markets from India to
Mm.
China or vice versa, overall we should see emerging market flows coming back to the table over the period of next 1 to 2 years. And if that happens,
Mm.
along with the consistent domestic flow which we already have, we should be good in good shape, as earnings kind of keep supporting the overall markets.
Absolutely. And with that positive, outlook, which sectors are likely to benefit or expected to do well, in this in the next 12 months or FY26?
Yeah, I think from a sectoral standpoint, my view would be that for the next 12 to 24 months, consumption is a sector one should
Mm.
surely look at. Why 12? Because as I mentioned, that the clear focus from a government policy making, both on the
Mm-hmm.
monetary side and the fiscal side, is to boost the overall consumption.
Mm.
Now, if that is likely to happen, then we may see activity kind of pick up more so on the discretionary side first, and then probably followed by the staples, kind of category.
Mm.
So that's a sector which we like. Second,
All right.
we
Mm.
also are bullish on the overall financial services. And when we
Mm.
talk about financial services, it includes the asset management companies, insurance companies,
Mm.
and the likes of all those companies which lie in these kind of bucket.
Mm.
Lastly, we would like banks, but post the reduction in terms of the interest rates from the RBI,
Right.
as well, because that would entail some amount of spread compression in the shorter term.
Mm.
Once that happens, is when we would be very constructive on that segment as well. And lastly, again, is IT sector, which we do think that once the geopolitical situation or global situation of this tariff, kind of gets over, is when we start to see some amount of recovery there as well.
Absolutely. In fact, one of the space, which is the broader market space, sorry, sorry, saw some bit of knee-jerk reaction post September when the market sort of topped out. But then again, we saw a good bit of recovery as well happening in the smaller mid cap space. So how should one play this space, in this time frame when the earnings are likely to sort of pick up in the second half of 2025?
See, mind you, I think the mid cap and the small cap space,
Mhm.
on an overall broad-based valuation perspective, is still
Okay,
trading a little more expensive, right? So one
sure.
has to be very careful in terms of the stock selection, and have a look at that those companies which gives you that earnings momentum
Hmm.
while their forecast getting upgraded is the pocket where you would probably want to get invested in. Those companies who are not able to kind of deliver to the kind of earnings with a higher
Mm.
valuation, I think they stand at risk. So need to be a little careful on the overall mid cap and the small cap space, only because that the valuations are a little richer as compared to the large caps.
Slight bit of caution coming there from Weber, but not a problem. But on that note, thank you so much for your time, Weber. And that's all for now. But do stay log on to ET Markets live stream more on investment and trading ideas. Again, Thank you so much for your time.
Thank you very much, Hitesh. Pleasure to be here.
Thank you so much.
Thanks.